Disclaimer. This podcast is for educational and informational purposes only and should not be considered financial advice. Always conduct your own research before making any investment decisions. Okay, welcome back. We're looking at the week of October 27th, 2025, and wow, what a setup. Wall Street just punched through to new all-time highs. S&P 500 closed Friday at 6,792.
Yeah, fresh records. But it's right before a really packed week, isn't it? Fed decision, massive tech earnings.
Exactly. That's the paradox. So our mission today, our deep dive, is to figure out what got us here, specifically that CPI number, and then pinpoint the really critical levels technically and, geopolitically that could steer things next.
Makes sense. Let's unpack it.
So the big push higher, it really came from Friday's September CPI report, right? It was softer than expected.
That's right. Headline inflation month over month just 0.3%, and the core reading, stripping out food and energy, even lower at 0.2%.
And the market just loved that. S&P jumped, what, 2.72% for the week?
It did, and that immediately puts the spotlight on the Federal Reserve this Wednesday.
Because the thinking is, with inflation cooling like this.
Well, the market's now pricing in a 99% chance they'll cut rates by 25 basis points. That would take the target rate down to 4.00%.
So we're in that sweet spot, the Goldilocks zone.
Sort of feels like it, yeah. You've got stocks at records, the 10-year Treasury yield holding pretty steady around 4.02%.
Oh.
And maybe just as important, the VIX, the fear gauge.
Yes, the VIX.
It's cooled right down to 16.37. Remember that panic spike we saw? It was up over 25.
Big difference. Okay, so if the cut is basically 99% priced in, isn't that a risk? Is the market already expecting too much? What if Powell sounds, hesitant about December?
That is the key question this week. The focus isn't really on the cut itself on Wednesday. It's all about the tone of forward guidance from Powell and the FOMC.
Right.
But, that's just hurdle number one. Thursday is packed too. We get the first look at Q3 GDP.
Always potential for a surprise there.
Always. And then also, on Thursday, you have that Trump Xi meeting happening.
Which feels huge. Our sources were really emphasizing the sentiment factor there. Any hint of tariff relief.
Could be like market rocket fuel. Yeah, that's the thinking. A major potential catalyst.
Okay, so geopolitics, Fed guidance, GDP, and then there's earnings. Massive tech earnings week.
Oh, yeah. The big ones. 5 of the Magnificent 7 report. Alphabet, Meta, Microsoft, Apple, and Amazon.
Huge. For Apple, sitting around $262, is it still about services growth versus maybe worries over China tariffs?
That seems to be the narrative, balancing strong services against any potential headwinds from, trade tensions or competition there.
And for Microsoft and Meta, cloud and ads.
Pretty much. Azure growth for Microsoft is critical. And for Meta, it's about how resilient that core advertising revenue is proving to be.
Okay, let's look at the S&P chart itself, closing right under 6,800. That feels like a really key spot.
It absolutely is. 6,800 is major resistance, and the reason it's so important, technically speaking, involves options positioning.
The gamma squeeze potential.
Exactly. If we push decisively through 6,800, options dealers who sold calls at that level might be forced to buy stock rapidly to hedge their positions. That forced buying can accelerate the rally very quickly. It sort of opens the path towards that next big psychological level, maybe 7,000.
And the downside, if we can't break through.
Then you look towards support. The key level there seems to be around 6,600. That's the first major line of defense.
Interesting. And while the S&P is, relatively calm near highs, look at gold and Bitcoin. Much wilder.
A stark contrast, yeah. Gold closed Friday at $4,112, but that was after a massive plunge earlier in the week.
Yeah, what was it? Down 6.58% in a single day. Largest drop in over a decade, they said.
Incredible move. And it tells you something, right? With CPI easing and rate cuts looking likely, maybe that urgent need for gold as an inflation hedge just evaporated quickly for some traders.
Makes sense. And Bitcoin, hovering around $111,600.
Bitcoin's at its own sort of crossroads tied to its halving cycle dynamics. It really needs to break above $116,000 to confirm the next leg up.
And if it fails...
The worry is it could fall back towards the $98,000 area, which some analysts are calling wipeout territory. So a pretty critical juncture there, too.
Okay, so wrapping this up for listeners trying to navigate the week. Key levels to watch. S&P 6,800 on the upside, 6,600 on the downside.
And for Bitcoin, that 116-ton-K breakout versus the 98K support level.
And there's an interesting detail in the source material about who's buying.
Right. It points out a divergence. Institutional money, the so-called smart money, seems to be buying up quality mega-cap tech stocks quite aggressively fastest pace in a year.
But retail investors are apparently sitting relatively flat.
That's the picture painted. It raises questions. Now, overall, Q3 earnings are actually beating expectations pretty handily, something like 87% beat rate, delivering about 15% EPS growth year over year.
Which sounds great on the surface.
It does. But the final thought, the real takeaway perhaps, is that the forward guidance companies give this week might be much more important than those backward-looking Q3 numbers.
Because of rising costs for AI infrastructure and the ongoing tariff uncertainty.
Exactly. Those factors create uncertainty about future profits.
Hmm.
So the message is, pay very close attention to what companies say about the next quarter and beyond. That's likely what dictates whether the S&P pushes towards 7,000 or has to retest that 6,600 support.
Got it. So focus on the forward guidance, not just the EPS beat. Lots to watch this week.
Definitely. Stay sharp out there.